Balasubramanian, the Director of Healthcare at Sanford Bernstein, is with us. Nithya, thanks a lot for joining in. Ekta summarized it very well as to what to expect from the sector, but what's your own assessment? Is there any degree of outperformance that you're expecting from any segment this time around?
As Ekta pointed out, a lot is priced in. One of the names we are expecting to do well after the quarter reporting would be Cipla, because valuations are, let's say, relatively reasonable. Of course, Cipla also did well last year. If you remember, Cipla actually upgraded margin guidance in 2Q. However, the stock didn't really move at that point of time on that announcement because people were still worried about, the promoter stake sale. But we are hoping that when that margin guidance is realized and you see these levels of higher margins being sustained, we are expecting the market and the stock, therefore, will actually react. Beyond Cipla, from an earnings perspective, we think the 3Q quarter, the season came back. I think 2Q, if you remember, was pretty weak. If you go back and look at commentary from Mankind, Alkem, they were talking about a relatively weaker season. We think the season caught up in 3Q. So therefore, Mankind, Alkem, and Cipla as well, for whom this tends to be a big respiratory quarter, we think should post much stronger numbers in India, which will reflect on the margins as well.
Nithya, hi, good morning. One of the names around which there has been a fair degree of excitement recently and over the years has been Aurobindo. But of course, 23 was a big year for the stock. What are your thoughts there?
I think Aurobindo is obviously a big beneficiary of the softer price erosion trends we have seen in the US. They're most exposed to that, right? So most of what they do is either in US or Europe. And that's the reason the delta has also been significant in Aurobindo compared to the other stocks. As we said in our outlook note earlier this year, we do believe in the rest of the year as well, the softer pricing environment will sustain. In general, we went back 10 years and checked what is the correlation between interest rates and generic pricing. And whenever interest rates tend to be high, it's a relatively better environment for pricing for generics. So we believe Aurobindo will continue to realize that benefit. And on top of that, they've got other catalysts as well. The primary one this year being, this calendar year being the PLI scheme and their facilities coming online, and therefore revenues being realized there as well.
One thing this market is always looking for, especially in such an elevated market, is stocks that have reasonable valuations, right? And in that context, Biocon works well. It has rock bottom valuations. So do you think there could be a lot of buying interest here? And what's the expectation from the earnings?
Yeah, I think the challenge for the stock, while valuations remain attractive and we like the name, I think the challenge for the stock has been execution has been a little weaker than anticipated in the recent past. They do seem to be doing pretty well in terms of products that they already have in the market. They're gaining market shares in pegfilgrastim, trastuzumab, possibly Glargine as well should see some market share uptick. However, that doesn't seem to be enough to move the needle on earnings, right? I think they need the new products, and that's where traction has been lesser than anticipated. Insulin aspart is still stuck because of overhang on the Malaysian facility. Bevacizumab is stuck. Human insulin is stuck. So I think that's what we are expecting, that we will see traction in the later half of the year, and that we are hoping will move the needle for the stock.
You like Gland as well, Nithya?
We do, particularly in injectables. We're actually seeing a much stronger growth in terms of prescriptions in the US. And given that they're almost entirely exposed to the space, obviously Gland will be a beneficiary. And Oro and Dr. Reddy's also have a substantial injectable portfolio, so we think that part of their business will also grow well. But specifically to Gland, we think a lot of the elective procedures which were pushed out during COVID are seeing a comeback now. Now, last year, we didn't see the expected comeback because of a nursing staff shortage situation in the US. But now that that's sorted out, we think a lot of these procedures are coming back, and hence the stronger growth we are seeing, which should benefit Gland. And on top of that, we think what could surprise the street is a margin improvement in the Cenexi asset that they had bought. There is obviously room for significant operating leverage there. In the second half of the year, as they fill up the facilities in Europe, we think that can also be realized.
You have an underperform on Divi's Laboratories. Is it the low margins that are concerning to you and the weak operational performance compared to its peers? And what's the expectation as we move along?
So our rating is more fundamental in the sense that they seem to be participating in slower growing parts of the market. So when you look at the custom synthesis business, they're not in biologics. And even within small molecules, they do not work with early stage biotech or emerging biopharma. They're not participating in some of the higher growth modalities like oligonucleotides, high potency APIs, and even peptides. So I think the reason excitement on the stock is because the promoter started talking about participating in the GLP-1 space. However, when we look at the opportunity set that's available to them, we believe they're a little late to the game. Wuxi Aptech, Bakim, Polypeptide, Cordon Biopharma. So these are all companies which are disclosed CDMO partners of the innovators for the GLP-1 drugs, and they're scaling up capacities quite aggressively. We're just not sure how much room there is for a disease. So therefore, we are not as excited about the market as the market is about the GLP-1 opportunity. And beyond that as well, in the near term, margins have been much weaker than anticipated. And there is still pressure, at least on the generic side, which is still 60% of their exposure. There is still inventory destocking and pricing pressure playing out for API companies, which we don't think is in the price for disease.
You know, if some of these estimates for GLP-1 drugs, etc., come true, I mean, that's going to be, I mean, what, the single largest category, right, in terms of drugs. Some of the forecasts that are being put out. You know, is there a way for do you think, I mean, Indian companies will participate meaningfully? Not maybe immediately, but in what way, in your opinion?
See, right now, the opportunity is actually for CDMO companies that offer contract development and manufacturing services for innovators, right? So which means, as of today, we do believe Divi's has the capability, but they have talked about being able to manufacture only certain fragments of the API, right? These are very long chain amino acids, 39 amino acids, and the entire API is not something Divi's can make today. So they can participate, therefore, only in parts of the value chain. And we're not sure that that's a very substantial opportunity. So therefore, the custom synthesis or the CDMO opportunity seems to be limited. We do believe that the market will open up at some point of time broadly for generic copies. In India, we think semaglutide can lose exclusivity 2026 onwards. We know that Sun Pharma, Dr. Reddy's, Zydus, Aurobindo, all of these companies have APIs. They could potentially participate. When we look at the US market, we think semaglutide will lose exclusivity 2031 or later. Again, multiple companies are participating in that space. Tirzepatide, which is Lilly's drug, we think there is time. It's 2036 or later. So that opportunity is some time away. In India itself specifically, we think Cipla or Lupin can potentially get a license from Lilly for tirzepatide.
Okay, got it. Thanks a lot. That was very exhaustive in terms of what to expect from the sector. Appreciate your thoughts. That's Nithya Balasubramanian of Sanford Bernstein. By the way,